Let's go.
Hello guys, today I'm going to show you how to enter a trade smoothly without going through a lot of stress, without complicating your chart. It's very simple. You don't have to draw a lot of lines or to use some kind of trend or to use some kind of pattern. You don't need all those. You just know what you're doing, man. It's very simple. All you need is liquidity. You have to chase the opposing liquidity. So this is a 15-minute chart. Let me go back to the daily chart and see what I'm doing here. My high time frame is daily chart. Actually, you see, this is inside fair value gap. I mean inverse. You know, so market reach up to that and started retracing after taking out excess liquidity on the daily chart. And anytime a market take out a excess liquidity paired with maybe a fair value gap or inverse fair value gap, expect market will react from that point. That's what's happening here. So this small move from here to here is more like a retracement. Though it might be a reversal, I don't know. But I am treating it as a retracement because I still expect the market to go more lower. But at this point, I'm expecting the market to respect the inverse fair value gap around here. Let's go to 4 hours chart. Let's see, maybe you're going to see something tangible. On a 4 hours chart, hmm, this is lovely. We have the market is moving upward. It's obvious. Moving upward, taking out higher highs, forming another higher highs. On a 4 hours chart, here we are. We have a fair value gap here. Since we are looking for opportunities to buy, a long fair value gap is around here. So in a fair value gap here, market is inside it already. It has returned back to the fair value gap so many times that we just need to look for a break of structure. That's what we're looking for right now. We go to the 1 hour chart and we move to the 1 hour chart, you see that you have some kind of fair value gap around there. You have already streamlined the 4 hours fair value gap into 1 hour fair value gap. Yeah, we're still looking for opportunities to buy, and on the 1 hour chart, this is the only opposing fair value gap. I mean the PDR that hasn't been tested. The one here has already been tested, but this particular one, it has not yet been tested. So markets might reach up to that. So we are here now. Notice how many times the market will reach the fair value gap on a 1 hour chart. You see here, one, two, let's say three, right here. So all we need to look for is a break of structure, and it has already happened here. I don't trade on Monday. You see the Monday lines from here up to this point. I don't trade on Monday. I just look for market to give me some clue for the week. So this is what happened. Today is Tuesday, and I'm looking forward to buy. Yep. So we have a favorable gap on the 1 hour chart. It has already reached the favorable gap, and we have a short time high. We have a high here, and I'm expecting the market to break the high. Then I'll look for a retracement to enter with. So on a 15 minutes chart, that's where the real work is. On the 15 minutes chart, we have a break of structure, market structure break. It moves aggressively in London, a little bit of consolidation, but entering New York already. This is my entry point. We have a market structure break upward. Hadn't been the market reach out to this liquidity around here, I would have calmed down and stay on silent. But it hasn't take out the liquidity. You have one here, another one here. So I'm expecting the market to reach out to the liquidity around there, and to the fair value gap I showed you on the 1 hour chart above. So um this is the fair value gap. I'll try to take a trade here. There's nothing to look for anymore. This fair value gap here has already been tested. You see, week, this week, I mean the week of the candle here, it has already been tested, and I don't expect market to move down to this place anymore. So I'm expecting the market to move up and reach my goal. So I'll enter a trade around here on the 15 minutes chart. There's no point in going lower anymore. So let's enter a trade and see how it goes. So let's say you enter from here, put your stop loss below here, because I don't expect market to reach up to this point anymore. So and you set your targets to the fair value gap above. That's 271 point. It's good, not really bad. So let's see how it goes. And it's very simple. You don't have to stress yourself about anything. Just leave it, let it run. How many risk to reward ratio? You see, that's 1:3 reward ratio. 1:3. You see it on the bullish diagram. Everything is there already. You don't need to complicate your market. If the market should take you out, yeah, it's better to wait and look for another opportunity, because this is the best entry. You can't enter a trade more than this. You can't do more than this. This is the simplest entry I've given you here. You don't need anything else. Imagine you can enter like this smoothly without sweating, without complicating anything. Within 10 minutes, you've analyzed your market and look for your entry. If you find your entry, good. If you don't see it within 10 minutes, bro, get the hell out of the market. You don't, it's not for you that day. Look for it another day. So let's see. Let's calm down and see, maybe to reach up to the target. There's nothing to worry about. You don't need to rush. If you should take me out here, I'm done for the day, bro. Because there's no point. Or I might look for another opportunity and risk very low. So that's the target. I've entered the trade already on my live account. I'm just showing you here. I can't show my live account because it's very risky for my own safety, you know. So let's see how it goes on. Okay, guys, I'm back. If you notice something right here, this is a nice delivery, and it's faster than I thought. So let's try to go through the analysis again and clarify some shit. We have relative equal highs around this place. See, this high and this high. Market took it out, then retraced lower. But if you notice something, the lower low, it didn't take out the lower lows. You see, this one, this one, this one. Instead, it is forming higher lows. This one, this one, this one. That's like a bullish flag, like to let you know that the market is going to be bull. The lower highs, they are already been taken out. So the market is taking out the lower highs, but refuse to take out the lower lows. That's like a bullish flag. I don't know if you understand what I'm trying to explain right here. So this right here, let me try to highlight it. I don't use straight lines or anything. I'm just drawing the lines just to explain the shit right here. I don't care about those lines and all those bullshit. You see this line here? That's to tell you that the market is going up. And you see this line here, it's breaking it out, breaking it up without taking the lows. So that tells you that this is a bullish flag. That was what ginger me to look for a bull setup. Apart from my daily bias that tells me that this market is going to be going up. There are so many scenarios, there are so many things that needs to be aligned before you decide your bias. Okay, there are so fucking many things, bro. If I've done my own work, I could just enter the market. Within 10 minutes, I've already known what I'm doing. What is left for me to do is to like wait for my setup to align, then enter the market. If you just see some random people taking trade without explaining what they are doing, they've already done their own work. Then they just enter a clean sheet market and enter the trade, and you see that boom, it's a success. It's not as easy as it is. It's very complicated than what you think. But this one is simple, very simple. Just know your bias. You know the setup. When you see break of structure, look for a retracement, which is here. That's what I did here. I look for a retracement, which is a short-term retracement. Let's more of like consolidation after taking out these equal highs and the highs here. This is lower high. After taking it out, then I wait for a retracement around before New York Open. I've been seeing retracement, though I enter too early before the New York Open because I don't know what market will do because my strategy had already been aligned, everything has already been aligned before the New York Open. But sometimes you have to wait. But I know what I'm doing, so I don't need to be waiting for anything. Once my strategy align and everything align, though I trade time and price sometimes, but time, if it's very close, I don't need to wait till New York Open. If it's very like in this scenario here, it's I saw my pattern before the New York Open, like very close to the New York Open. So if I enter, there's nothing wrong. It will not take me out. So that's what happened because anytime market opens at New York, expect buy side or sell side liquidity to be raided before going in the direction it is meant to go. So that's what happened here. We have after the New York Open around 7 a.m. market sweep the liquidity inside the fair value gap. Let me go to a lower time frame so you can see it. You can see what I'm talking about. Market raided these lows inside the fair value gap. Where's the line? You see, these lows, that's like a confirmation that this is bullish. If it's either you can wait or you can take it, but you must place your stop loss below the swing low here so it will not take you out. Because I was expecting the market, even if it's going to go lower, it shouldn't pass this fair value gap in 5 minutes chart here. That was the plan, and I entered here. So expecting the market to move up aggressively, and it did, and it touched my target. That was like how many risk to reward ratio? 3, 1:3, and it's very nice delivery. I'll talk more on this. Just follow me, subscribe on my YouTube channel, and you're going to see a lot.